Hey everyone, this is Ronak Ahuja. I welcome you all again. When it comes to paying taxes by the corporates, there are two major options available to them. The first one being the regular rates of tax or minimum alternate tax, which we also call as MAT, and the second option being the concessional rate of tax. However, this concessional rate of tax is only available if they satisfy certain criteria. In this video of today, we'll be discussing both these options with you so that it becomes simple for you to understand the taxation aspect of corporates. So without wasting any further time, let's quickly begin. So let's talk about the first option, which is regular rates of tax or minimum alternate tax. For this purpose, we'll have to classify the corporates into two different categories. The first one is the domestic company and the second one is the companies other than the domestic companies. Please note viewers, the regular rates of taxes for both these types of companies would be different. So let's call R1 for regular rates of tax for domestic companies and R2 for non-domestic companies. Now, under the domestic companies, let's further classify it into two categories. The first one being companies engaged in manufacturing and the other one is companies not engaged in manufacturing, that is others. So let's talk about companies engaged in manufacturing. The first step would include calculating taxes as per R1 or regular rates of tax or as per section 115BA. So there's an option available to companies engaged in manufacturing. Yes, either they pay taxes as per R1 or as per section 115BA only if they satisfy all the conditions mentioned in that section. This would be the first step. The second step would involve calculation of taxes as per book profits, that is MAT. Now, once the taxes are calculated as per these two steps, then the higher of the taxes will be considered as tax payable. So this was calculation of taxes for manufacturing entities. Now, moving on for non-manufacturing entities. Here, the first step would be the same with a little difference. In the first step, we'll be calculating R1 only. There is no other option available to the non-manufacturing entities. That is, the optional or concessional rate of tax under 115A is not available to the non-manufacturing companies. Then, the second step would be the same, which is calculation of taxes as per the book profits. That is, as per MAT. Here again, the tax payable would be higher of these two steps. That is, taxes calculated as per step 1 and taxes calculated as per step 2. Higher of these two taxes would be treated as tax payable by the companies other than manufacturing. Now, moving on to tax rates for companies other than the domestic companies. The first step here again would be calculating taxes as per the regular rates of tax, which will be R2. As explained earlier, since the regular rates of tax is different for companies other than the domestic companies and the domestic companies, we denote it as R2. The second step would again involve calculation of taxes as per MAT, that is, taxes as per book profits. And then again, higher of the two taxes would be treated as tax payable by companies other than the domestic companies. Now, before we move any further, let's first try and understand what these R1, R2, taxes as per 115BA and taxes as per MAT actually are. So let's start with R1. The regular rates of taxes for domestic companies, that is R1, would be 25% or 30%. In case the turnover during the financial year 23-24 does not exceed 400 crores, then the tax rate applicable would be 25%. Else, for all other cases, it would be 30%. Now, moving on to taxes as per section 115BA. The tax rate as per section 115BA would be 25% of the total income as per section 115BA. However, there is a condition. The company should have been incorporated or set up on or after the 1st of March 2016. Only then this concessional rate of tax would be applicable. Further, the total income should have been calculated in the manner as been specified under section 115BA, subsection 2 and subsection 3. Additionally, they will be required to file a form which is called Form 10IB in order to opt for this concessional rate of tax. Now, moving on to tax rate as per MAT. Now, for understanding the tax rate as per MAT, we'll first have to understand that the MAT rates are applicable for both the domestic companies as well as the non-domestic companies. And the tax rate for both these companies would be 15% of the book profits. Yes, I'm stressing on the word book profits because this is totally different from the total income. The book profits are calculated in the manner as specified in the table to my left. Here, the profit as per the P&L account is taken at the top, and then there are certain additions and deletions that are made to this P&L profit. The resultant figure that we arrive at is called the book profit. Note, these additions and deletions are clearly specified under section 115 JB. So after calculating the book profits, a flat tax rate of 15% is simply applied on this book profit. So this is how we calculate taxes on MAT. Now moving on to the regular rates of tax for companies other than the domestic companies. In case the total income of such companies includes royalties or fees for technical services in pursuance of an agreement with the government dated back to 31st of March 1961, then on such portion of the total income, 50% tax rate would be charged. And on the balance income, the tax rate that would be applicable would be 35%. This would be on the total income. So this was all about R1, R2, tax rates as per 115BA and taxes as per MAT. Now let's quickly move on to the concessional rate of tax, that is option 2, that is available for the domestic companies as well as the non-domestic companies. Now, while discussing the concessional rate of tax, we'll again have to divide the companies into two broad categories. The first one being the domestic companies and the second one being the non-domestic companies. Let's first talk about the non-domestic companies. For non-domestic companies, there are no concessional rates of taxes available. Yes, you heard that right. There are no concessional rates of taxes available to non-domestic companies. The concessional rates of tax would be available only to the domestic companies. Now, moving on to the domestic companies. Here again, we'll have to divide the domestic companies into two categories. The ones engaged in manufacturing and the other, the ones not engaged in manufacturing. For the manufacturing entities that have started their operations in between the period 1st of October 2019 and the 31st of March 2024, for them, they'll be having an option to opt for the concessional rate of tax either as per section 115BAA or as per 115BAB. Yes, the company will be having an option to choose from these two concessional rates of tax, that is as per section 115BAA or as per section 115BAB. However, they'll still have to comply with the conditions mentioned therein. Now, for all the other manufacturing entities who have not started their operations between this period, for them, the only concessional rate of tax that would be available would be 115BAA. And for domestic companies who are not at all into manufacturing, for them also, the only concessional rate of tax available would be 115BAA. So this was concessional rate of taxes. Now, let's try and understand what these tax rates actually are in case of section 115BAA and 115BAB. Let's start with 115BAA. The tax rates applicable in case of section 115BAA is 22% of the total income calculated in the manner as specified under section 115BAA. The total income will be calculated in the manner as provided under subsection 2, 3 and 4 of 115BAA. In order to exercise the option available under this section, we will have to file a separate form, which is form 10IC. Now moving on to section 115BAB, the tax rate that would be applicable would be either 15% in case of business income and 22% in case of any other income other than the business income. Here the company should have been registered and started out operations of manufacturing or production in between the period 1st of October 2019 and the 31st of March 2024. And the total income will be calculated in the manner as specified under subsection 2, 3 and 4 of section 115BAB. Here again, we'll have to file a separate form to opt for this concessional rate of tax, which would be form 10ID. Now, let's summarize this entire thing for you so that you understand it in a more lucid manner. So, to summarize, the domestic companies that are engaged in manufacturing and have started their operations of production in between the period 1st of October 2019 and the 31st of March 2024, for them, these two options of tax rates are available. The first option has been highlighted in cream color and the second option has been highlighted in yellow color. They can choose in between these two options. For all the other manufacturing entities, these tax rates would be applicable. Here again, the first option has been highlighted in skin color, that is the cream color, and the other option has been highlighted in yellow color. For all the other remaining domestic companies that are not engaged into manufacturing, for them, these tax rates would be applicable. Here again, option 1 is in cream color and option 2 is available in yellow color. They can choose in between these two options. Coming on to companies other than the domestic companies, for them, no concessional rate of tax is available. They will have to go for option 1 only. In addition to this, the companies would also be liable to pay surcharge in some cases. Let's look at the rates of surcharge also in some cases. That's to my left. So these were the tax rates and the concessional tax rates that are applicable to the domestic companies as well as companies other than the domestic companies for the financial year 2025-26. About the returns are due for filing for corporates by the 31st of October 2026. Make sure you adhere to that deadline also. About the video, if you couldn't follow any part of this video or have any queries in respect of the same, do remember to write us a mail at talklevies@gmail.com or mention the same in the comment section. For more videos like these, keep following us.